Okay, folks, welcome to the week ahead commentary. I'm going to put this out to the general public. I'm recording this from Kinsale, Ireland. This is the area where my family comes from. There's actually a castle. I'll post videos when we get back to the States uh, of uh, of a castle called Castle Desmond, and I'll show you a little bit about the town here. You may hear some background noise, I'm sure, but they had a big rugby match over the weekend, and now they're kind of going home, and the town's going to quiet down a little bit. This is the old bank house there. That's where I'm staying. Really, really great place. The place is absolutely stunning. I don't know why I waited this long in life to get out here, but I'll tell you, it's a beautiful place. We were supposed to leave today, and sorry for all the movement. We were supposed to leave today and head up to Galway, which is about 5 to 6 hours by train. And my wife is like, "You tired? Why don't you just take a break, relax? We'll stay here for a couple of extra days." Call, in this case, it was Delta. I paid with American Express, but Delta, see whether or not you can get a refund on the hotel up there. And I got to tell you, shout out to Delta. The customer service was outstanding. I uh, I booked the flight, I booked the hotel through Delta. I got a great rate on the room, and this young kid, I'm waiting for the survey request to come through. This young kid did a great job, got it canceled for me, and I didn't have the cancellation. I didn't pay for the additional charge for the cancellation, and he took care of it. So shout out to Delta Airlines. Um, what else? That's about it. I was up at Blarney Castle yesterday, kissed the Blarney Stone, and it was great. It was really great. I'll get these photos up in the next few days or so. But having a really great time, and it's good to check in with the markets. Over the weekend, I hear that Warren Buffett uh, has resigned from Berkshire Hathaway. So great respect to Mr. Buffett, and I hope he enjoys his hopefully long retirement. And let's get to it. Let's talk about the pre-market activity. If by you folks, it's about 4:15 in the morning. So let's take a look at the futures action. I saw a little bit of pressure last night. So checking in, let's get rid of this. Checking in with the futures activity. These are all 30-minute charts with the exception of the VIX lower right-hand side. And you have the NASDAQ, which is down a little over a half percentage point. Bond yields are down. They don't look down. Is this a new contract? No, it's not. So they're down fractionally relative to the close on Friday. Dollar is up, which is good for me being here in Europe. And volatility, this is only this is a 4-hour chart. Volatility is up and consolidating. So we saw a really good week in the markets last week, and what I want to concern ourselves with this week is the potential for a pullback in the equity markets. Now, I sent out an alert on Friday that we added to our short position, not by a lot, and it's a hedge. It's not a net short position. We are net long right now. That, however, is that I think it's time after this really nice rally that we've seen to begin speculating to the short side. So we'll talk about the closing price action of the charts. I haven't looked in great detail yet. I just scrolled through very, very quickly. The one chart that I did take a look at was very, very attractive, was a chart of emerging markets. So emerging markets, the EMXC, that's emerging markets ex China, no China. We own that. We're going to be looking to add more. Why? Weekly breakout last week. So let's get to it. Let's talk about the weekly closing price action. We'll talk about valuations. We'll talk about the Fed Watch tool as well. Now, taking a look at the valuation of the market, the market's very expensive. Yields. The earnings season is by and large, we're halfway through it. Yet earnings or the PE multiple is at a 35 handle. So it's very expensive out there. So we cannot rest on our recent rally and saying, okay, the coast is clear. It's not. We need to worry about some downside price action here. And moving on, I apologize. My throat is a little bit, I don't know, sore. Moving on to the Fed Watch tool, which is not loading for me. Now, the Federal Reserve, they're meeting on May the 7th. There's pretty much a zero probability of them cutting. Now, moving out to June, and I haven't looked at this in a few days, 34% probability. I mean, this really dropped down quite a bit since the last time we looked at it. Last time I looked at June as a rate cut probability, we were at a 60 handle. That was last week. Now we're only at 34%. Looking at the July probabilities, that was over 90%, now down to an 80% handle. So you can see how much volatility we have here. Now, what I want to do is, I haven't looked yet. I want to take a look at the Fed's balance sheet. Okay, so here we have it. For those that have not been watching for the past few months, I've been talking about my expectation that the Federal Reserve would rather increase their balance sheet rather than cut rates. It would be a stealth rate cut. And I really don't know what they did last week. And they actually declined. The Fed's balance sheet declined last week. So that pause that we had with a bias to the upside, that's done. They've begun reducing the size of their balance sheet. So apparently, there's no activity whatsoever expected of the Federal Reserve until a bare minimum, July. You have expensive stocks, a Federal Reserve not increasing their balance sheet. I'm not exactly sure what is going to continue to allow the markets to move up higher at current. Technically, we're going to talk about that in a moment. I don't want to pontificate without first taking a look at the charts in detail. So let's get to it. All right, so beginning with, I don't want to begin with the Dow Jones. Let's begin with sentiment. This is the NASDAQ Bullish Sentiment Index. And we're on a weekly time frame. And you can see that this is by and large normalized now. We're in the mid-range of where we're supposed to be. We're not oversold. We're not overbought. Anything could happen here. So we have no edge. You know, if we're up here between the green and the red line, that would be an extreme overbought, meaning overly bullish. I'd be looking to short aggressively. I'm looking to short, but not aggressively. And when we're down here, I would be looking to buy aggressively, and I'm not. Taking a look at the bullish percent index on the S&P 500, it seems to be even more overbought, or I should say more extended to the bull side rather than the NASDAQ. So the extreme level is right up here at around 85. We're a little over 70. Yeah, 70.20 on the bullish percent index, weekly time frame. So there's a little bit more upside to be had here, but we're at that point where we say, okay, let's be aware of this, just in case things go the wrong direction with news, the headlines, etc. Now, taking a look at the yield curve last week, it closed down fractionally, very fractionally. Let's take a look at the monthly chart. We are in a new month, and on the month, inside bar, no new high, no new low. Gold is even paused here. Equities have caught a bid. So no real fears here per se, and no tells about what's behaving well, except for Staples. Staples looking really good. Now, moving on to the bond market. A rejection on the TLT last week. They tried to break it out. Sorry about the noise. I'll pause here. Lots of motorcycle activity this morning. Okay, so we have the bond market, which was rejected last week. I wouldn't say bullish. I wouldn't say bearish. It's just doing absolutely nothing. Let's go to a daily view here. Daily view. Doji start formation, maybe putting in a higher low here, but we did gap down. How was volume? Volume was light. Now that tells me that bond yields, let's go to the weekly chart, bond yields, 10-year, they closed up, as you would expect, on that rejection of the TLT, closing up 1.31%. Moving on, tips, Treasury inflation protected securities, bearish reversal bar on the week last week. Volume was thin to the dollar. The dollar was up last week. Now, I want you to remember this chart because we're going to be talking a little bit about emerging markets in a moment. I do love the chart of EMXC. Again, emerging markets, no China. And the dollar had an up week last week. Stokes rising. Let's go to daily view. Daily view, island reversal. So kind of like in no man's land. If I had to say which way it's going to go, I would say it's going to go up. Euro. Reversal week, down week, closing down just under a half percentage point, and on decent volume, no less. Let's go to the yen. The yen closed down nearly a percentage point. They broke support. Very bearish price action for the yen last week. Bitcoin. Let's refresh this as it's trading at current. This is a weekly view. A little bit of stalling action here. We're up, but just barely. I would call this topping action, to be honest with you. At current, so far, up about just shy of a quarter percentage point. Let's go to a daily view. This could be setting up for a continuation move up higher. MACD is weak, very weak. Stokes are weak. But price matters most. We're at a support level. We'll see what happens here. We can go either way, to be honest. But that weekly chart, that takes precedent over the daily chart. Dow Transports. A really good week. I had mentioned last week that we were in, maybe it was the last weekend, that we were in a compression zone here, and we've fired off. So we own CSX. We'll go to that chart in a moment. Let's go daily view. How was volume last week? It was really good. So you saw accumulation on the transports. Now, here's the daily view. Daily view, really good price action, big breakout on Friday, up about 3 1/3%. That's a big move for the transports. And it was on volume. It was a no-joke rally. Now, moving on to the Dow Jones weekly chart breakout. So I think we need to expect a retest of, let's call it 41,000. We could head down below that for a retest, but let's call it 41,000 to use round numbers. That was volume. Volume was good. Daily view, a nice breakout on Friday. We saw that topping action on Thursday. And that was a reaction to nearing resistance. In fact, we pierced it, but ultimately got rejected on Thursday. Let's see whether or not we hold it today, Monday. Closed right at the 50-period moving average, which is declining. So that's going to act as a declining ceiling, perhaps. Now, the S&P 500 weekly chart, huge move. The thing to remember is that we have a tremendous amount of resistance up at 570. And we closed above the 50-week moving average for the first time since here, the week of March the 17th. Volume was good. Let's go to a daily view. Daily view, we're overbought here. RSI still rising. When I say overbought, I mean on Stokes. Good price action, not great volume action. This is the equal weighted S&P 500. Not as good a price action as the cap weighted SPY, but respectable. We did not close above the 50-week moving average on this ETF. Volume was a bit lower. Let's go to the Qs. And the Qs also closed above the 50-week moving average, closing up 3.44%. on the week. So a huge week. Volume was good, not great. With that type of percentage move, you want to see volume a bit higher than the moving average. It was not. Let's go daily view. Daily view, we close above resistance. We're probably going to retest that this morning, as you can tell by the futures action. Closed up on Friday 1.48%. QQEW, this is the equal weighted triple Qs, did not close above the 50-week moving average. So clearly, from the S&P 500 price action and the Q's price action, the market was led by the big players, Microsoft, etc. Daily chart, yeah, let's go daily chart. I'm curious. Yeah, you have a lot of resistance right at that 200 period moving average. It's 200 period moving average in red. It's almost like a demarcation line when it comes down to overhead supply. Volume is a bit light on Friday. The banks, a really, really good week last week, closing up pre-spot 62%. No volume though. Very, very thin volume. Let's go daily chart. Daily chart. Nice gap up. You might expect a filling of the gap here. We're nearing pretty overbought levels. That doesn't mean that we're going to crash or anything like that. It just means that downside reaction is warranted. The question is, in this type of a market, it's very, very easy to forget after a week last week that we've been through a very rough Q1, and it's easy to forget about that price action when stocks are going up. You're seeing 401k plans, etc., expanding again or getting back to normal, and then all of a sudden, weakness returns, and it returns with a vengeance. So let's not forget where we've been, and that's why we started adding more to the short side last week, because I don't think we're out of the woods yet. We certainly don't have the Federal Reserve to help us out here, and if headline news comes in weak, that's not going to be wonderful for equities. Technology, very good week last week, up nearly 4%. I mean, we had broken out the prior week, and this is what I always talk about. When you get a pullback and a retest of the breakout point, and then you get follow through. Beautiful, beautiful price action here, textbook, but there's no volume. So we need to put things into context. Semis closed up 3 1/3% on the week. Great price action. Volume action a bit weak. Let's see how they close this out. They're gapping this up here. Looks like more of a short squeeze than anything else. I don't see institutional accumulation here. Volume is not supporting. Institutional accumulation. Software. Beautiful price action. Up nearly 5% on the week. Really good stuff. Volume a bit light. Let's go to the daily view. Daily view, we're right at significant resistance on the IGV. Volume dropped off a bit to the upside on Friday. Taking a look at LABU, we booked half profits here at the 60 mark. I think it was a little bit higher. Yeah, we closed at 61.64, but we booked half profits. We bought down here. Nobody wanted it. We sold up here at 60 on the spot, on the dot. And we're probably going to get a retest of this prior support level, which is now support again. And ideally, we get follow through, and it may just add back if the price action warrants add back that half. And even if you have to pay up a little bit, that's fine. I just wanted to make sure there was not a rejection at this resistance level in blue. And I would have regretted not booking some profits. So even if I don't add back, we still have a half position here. It's a leveraged ETF. We're up on it pretty nicely. So I'm feeling good about the trade and our decision to book half profits. Let's go daily view. A little bit extended on Stokes. A little bit of topping action on Friday, even though we closed up. We closed off the highs of the day, and you have the 50-day moving average in blue acting as declining ceiling. Staples. These look really good. Last I looked, this did not look good. We have a reversal bar here. Very, very nice on Staples. Now, this is a little bit of a tell about the market. Remember that this time around, the yield curve steepening did not result in money going into bonds. Let's go back to it for a moment. Here's the yield curve. Bonds historically would rally when the yield curve steepened. Here's bonds, no rally. In fact, rejection. Where did money flow? Staples. You have upside appreciation and you get yield by about, I think it's about 3% yield on the Staples. And we did a reversal bar, bottoming action, and this looks like it wants to go up. Let's go daily view. No breakout daily time frame. I think we're going to get it though. Stokes a little bit weak, but I love this price action on RSI. It's just sitting at the 50 mark, just waiting to launch. So I think Staples move up, especially if equities begin to decline again. Because again, it's counterintuitive, but they're going to act as a safe haven, probably. Now, emerging markets, this is ex-China, no China. Your typical emerging market fund has 30% China exposure, mainland China. That includes Hong Kong. Now, we saw a huge breakout on the week last week, closing up over 4%. This is not a leveraged product. And this closed up with the dollar up. Usually these trade inversely of one another. That tells you the strength here. Now, the only caveat is that volume was very light and declined sequentially. So here's what I think is going to happen. We already went over the dollar. Dollar looks like it wants to go up. And we're probably going to get a retrace here, perhaps even back down as low as $56 per share. So on that retest, I want to be a buyer or add more to the EMXC. We already own some, not a huge amount, but we're going to look to add more there. Let's go to a daily view, see whether or not that's supporting my thesis for a pullback. We're fought on Stokes. Big gap up higher here. I don't think it's inconceivable to get retest of the 200 period moving average, filling in the gap, what have you. So very bullish on emerging markets.
Try that fried screen. Cheekers.
Energy. Energy closed down last week. It's been consolidating. We had a headline out of Shell last week that they were going to be buying back about 3.5 billion in stock. So that could be the precursor. And Shell is big over here. That could be the precursor for bigger moves here. Let's go to a daily view. Yeah, higher lows. So I think this is an area that's been beaten up and has not rallied in earnest with the rest of the market. I think we need to start looking at the energy plays here. Crude down big last week. Wow. Down 7.36%. Yet the energy stocks, which trade very highly correlated with oil, only closed down fractionally on the week. But oil does look like it wants to go down. Gasoline prices, they look like they're going to break lower. That's good stuff for our fellow Americans. Gold prices, no great shock here that we got a reaction to the downside last week, down 2.43%. And this is probably going to continue. Probably down through, I mean, we could retest the 3,000 mark. Gold stocks. down 3.82% last week. This is just purely a risk on trade, meaning money moved into high tech, moved into the Max 7 names. We benefit from that. The cost to us was that our gold plays, meaning gold stocks, silver stocks, they pulled back a little bit. So we may get more of a pullback here. Volume was just below average. Moving on to Nugget weekly chart, that was down 7.27% on thin volume. So we're going to be looking for bottoming action here on these plays to look to add more, but we're not seeing it yet. Silver close. This is a leverage product. Let's go to. This is a big rejection at resistance last week. Let's go to SOP.
Right, God, it's so better have fucking recycling thing. What have I done before?
SLV, really rough week last week. Bearish reversal bar. Let's go daily view. Not great. The best that we can hope for, I think, is an inside day today, big Monday, on silver.
Today, look.
Go to the pre-market activity here. Yeah, it looks like we're getting a boost at pre-market up over a percentage point. Silver stocks, nothing to do here. Watch. Weak price action. FLNG, really good week last week. I want to go to the monthly chart here. And for those not familiar with the FLNG trade, we're in this for two reasons. One is the monthly chart, the technicals. And we've been in this trade for several months now. And we've been waiting for this wedge formation to ultimately get resolved up. And we've been tested to the downside, but it's stuck with it because this is yielding at current around 12.5%. Our average yield on this is over 13%. So it's cutting us a check every quarter just to sit with it and wait for the breakout. Looks like we're going to get it. So FLNG looking very, very good here. Let's go to the weekly view. Good price action. We closed above the 50-period moving average for the first time since the week of February the 10th. So FLNG looking good. EOG Resources. Not a great week last week. A rejection. This is what I was worried about with LABU and why I booked that half profit is I was worried about a rejection at the prior lower band of support. And it is now acting as resistance. Now, we don't have a big position here, so no reason to scale out. But I would like to add more, but it's just not the time yet, especially with oil going in the wrong direction. CSX, a really good week last week. This was in a compression zone. Same thing with the Dow transports. This got resolved up last week. I think it goes higher. Closed up over 3%. Volume was a bit light last week. Impinj, we're not in this trade anymore. But it had a good week last week. Let's see what else I got up here. U.S. Steel, which we're still in, that closed up 3.21% on the week. It looks like it wants to go up higher. Good stuff. Volume a bit light. Boeing, which is it could be now our second largest position. I haven't looked, to be honest with you, relative to the TQQQ. But with the hedge, that makes this still our largest position. So it looks as though the shares of Boeing want to go up. We are at resistance. I can tell you right now, 190 is very stiff resistance. If we close above it, then I think we start breaking out above the 197 mark. If we break above that mark, guess what? New bull market on Boeing. And think about this. Even with all the talks of tariff, Boeing is moving up higher. Even with the talks of bans on LNG from China, guess what? Liquefied natural gas stocks have been moving up higher. These are all tells. So, what do I like going into the new trading week? I like what's doing well in a negative headline environment. LNG looking bullish. Emerging markets, yeah, we'll probably get a retrace because the dollar is going to move up higher. That'll be a reason to sell the emerging market stocks to get a pullback and a retest. But I want to be a buyer of those stocks on that retest. It may look ugly for the first couple of days, but we want to step into the breach. We want to buy that weakness, and then we want to enjoy the ride higher. And I think that is pretty much it. Groupon, I talked about this a few weeks ago. It stalled out here. Oh, Palladium. We own Palladium. How did that do last week? Closed up over a percentage point on the week. I think this goes up higher. I like it. It does not rally like silver and gold, especially gold. So Palladium looking good with that, folks. I will talk to you folks later from Kinsale, Ireland. Have a great day and a profitable week. I'll talk to you soon. Be well.